we're a capitalist country, right? And all of these companies have chosen to go woke. Target the other day, a great example. Target found out that, guess what? Those tuck-it swimsuits. Do you know what a tuck-it swimsuit is? If not, Alex Stein will show you. Alex, he has a channel, and we were running some video of him the other day. He went and tried on one of the tuck-it swimsuits. They were meant for kids so that you could like tuck in everything and wear a girl's swimsuit because maybe you were like having a moment and you were confused about your gender, or maybe you just wanted to wear a girl's swimsuit. Anyway, Target realized it can't sell all of those things in every single store. So consequently, it's going to offer that specific merchandise online this year. And it's going to offer it maybe in some select stores where they think the market can handle that, but they don't want to really just tick off the rest of their consumer base because it certainly didn't help them at all last time. And, you know, they want their stock price and their company to survive and hopefully thrive. And so at some point you just have to recognize, what is it my customer wants? This whole woke capitalism thing, I'm telling you, it's for the birds. It's a huge problem. You can't actually, even as a fund manager, it's partly why Rob and I started 76 Research. You can't, he was going crazy. I remember him telling me this great story. He was trying to invest in energy companies back in 2020 when oil had plummeted to some $20 a barrel. So energy stocks were down. So logically, right, you want to buy energy stocks. And yet there's all these rules and regulations around what you can and cannot invest in tied to wokeism, which is kind of annoying, right? Because we're pretty simple here on this show. We believe that, you know what? Profits matter. Profitability matters. Understanding your audience, your customer, all of these things, they matter. And so you want to invest in companies for the long term. They're going to continue to print money so that you will live well into the future and not have to work forever. It's part of why we created our model portfolios. Go check them out at 76research.com. Model portfolios there for you. There's a great growth portfolio that's all about this American sort of renaissance that we're experiencing. I mean, think about all these technological challenges that we've been able to overcome, right? There's transformation going on in real time. So that's what the growth portfolio is all about. And then we have another one for income generation. We have another one for inflation protection. Go there to 76 Research. Look at all those model portfolios. We give you in each one of them some 10 to 15 stocks. It's updated regularly, so you know if you really need to make a move into something or out of something else. One of the companies that we actually recommended, we thought it was a really good level to get in at, and I think this was actually part of the growth builder, forgive me, it was the income builder portfolio. One of these companies has since soared something like 13%. It's really rather remarkable. Well, the market has been kind of flat, but we knew it was a good level to get in at. I encourage you to check it out at 76research.com because yes, capitalism matters, right? Speaking of which, you know, I'm kind of wondering, what's going on with Jerome Powell over at the Federal Reserve? It's like he's taking orders from Biden and Janet. And as a result of that, he's actually hurt Biden and Janet in a massive way. I mean, you know, inflation is way up. We've talked about that over and over again on the show. And because it's gotten so high and because it's gotten so out of control, it actually is presenting a very precarious political situation, right? When you drive inflation all the way up to 9%, Joe Biden, you reset at a new normal. And the new normal is not something that anybody likes. Why? Because other wages aren't keeping up. Well, we got a new bit of news today on the inflation front that you're not going to like, but I want to explain it. I want to talk about it. I'm talking about PPI, Producer Price Index. These are wholesale prices, right? Otherwise known as wholesale prices. So this is what producers pay for goods. So if you own a little store and you're selling widgets, you have to buy those widgets from somewhere. So when you go out and you buy them, whatever price you're paying is considered the wholesale price, and then you sell it to your customer, which would be the consumer price. So these things tend to lag one another. So you'll see an increase, for example, in wholesale prices before you'll see it in consumer prices. And hopefully it doesn't get as high on the consumer side. I remember wholesale prices going upwards of 10% inflation. We didn't see double digits on the consumer side. We only got 9%. But the reality is when wholesale prices go up, everything else goes up, right? The local restaurant has to pay more for eggs, and guess what? You're going to pay more for an omelet when you go out on Sunday morning. So wholesale prices, they went up again, 0.5% in April, more than expected. More than expected. It keeps going up. I mean, just a couple months ago, we got a really bad read as well. This is what you call a hot read. This is super hot inflation. So how on earth does the Federal Reserve think it's ever going to cut rates, thereby adding to even more inflation this fall? It wants to cut, right? It so desperately wants to cut because we're going into an election year, and I guarantee you there's tons of pressure on Jerry, and he's like, can't do it. Here he is speaking today, kind of making that clear.
Inflation, it's worth starting with the fact that on a 12-month basis, headline inflation got as high as 7.1%, is now down to 2.7%. Core inflation got as high as 5.6% and is now at 2.8%, so it's down by half. That progress, though, really happened over the course of last year, particularly the second half of last year. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter, and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work. If I turn to the outlook just for a second, I would say we expect continued growth, 2% or better. We expect the labor market to continue to be strong, but to move further and further into balance. And I expect that inflation will move back down on a monthly level, on a monthly basis, to levels that were more like the lower readings we were having last year. I would say my confidence in that is not as high as it was, having seen these readings in the first 3 months of the year. So we're just going to have to see where the inflation data fall out. And I'll stop there with the economy. Thanks.
Okay, so translation. No rate cut if he can help it, okay? Because there's too much inflation. It's too hot. And so he needs inflation to come down before he can cut rates again. Because as soon as he cuts rates, you know what? Money gets cheaper again. And then as soon as money gets cheaper, it's more plentiful, there's more of it out there, and then you're back in this inflation scenario. In other words, ladies and gentlemen, this is not great. I mean, we're growing like 1.6%, nothing to write home about. He wants 2% growth. Usually they aim for 2 to 3% growth, around 2% inflation. But you get major inflation and you get 1.6% growth. I mean, it's not great. And when they asked him about like what is actually pushing the growth right now, interestingly enough, he said immigration. So 8 million people coming here that you don't know about, that aren't properly identified. They're the ones that are consuming in society. I mean, I don't think this is a great scenario where you're relying on a very poor migrant population to help sustain the U.S. economy. For goodness sakes, you guys really screwed it up now, didn't you? And that is exactly what voters think. And that is exactly why they are so over this administration. They have had it. And this is independents telling you. I mean, there's a study out just the other day. They asked independents, who do you think is the bigger risk to democracy? And the answer was Joe Biden, not Donald Trump, even though they tell you over and over and over again, you got to be scared. Not Donald Trump. Listen, there's a lot going on and there's a lot at stake, and there's inflation and there's the threat of a serious problem overseas. There's a threat of what's going on at our border. And when you're relying on illegal migrants to sustain your economy, it tells me you need better policy, which is one of the reasons I'm so proud to partner with wonderful organization, Americans for Prosperity, afp.org. Check them out at Americans for Prosperity. You can learn more about inflation. They've got a great site called Bidenomics.com. Not what you think, right? Because with all those TikTokers on his team over there, somehow they missed it entirely. They were coining the phrase Bidenomics, but they never bought the website Bidenomics. The folks at AFP did, Americans for Prosperity. So you'll find a link there to Bidenomics.com, or you can just go to Bidenomics and check that out. And they call it out, as they should. It has been a disaster. Stan Druckenmiller, the fabulous investor, billionaire investor, it was just on CNBC the other day saying, you know what, I'm giving Bidenomics an F. An F for failure, because it has failed America. It has failed the middle class. It has failed to help us prosper. And you know what? All he had to do was not screw it up. It's not like it was that hard. If he could have just kept the wheels on the bus, he would have been in a really sweet spot, Joe Biden, that is, because you had low inflation of 1.4% when he came into office. You had everything going for you, Joe, and you blew it. You blew it big time. So AmericansForProsperity.org, wonderful group. They care, and they are trying to make sure, as we all are, right, that we get people that have a brain in there and that understand economics and understand policy. It can actually make the right decisions for our future. So go check them out, AmericansForProsperity.org.